back. Quick little Bitcoin update today. And I want to talk about mainly a few things in regards to the recent price action. I also want to talk about the DXY, which is forming a very interesting structure. And I'll quickly brush over Ethereum as well, and also the total cryptocurrency market cap. Now, before we get into the video today, I do have a bit of an announcement to make. I will be doing I actually will be doing probably daily live streams, maybe 6 days a week. I'm going to change the way the channel's structured a little bit. So I'm going to be doing 6 days a week, most likely. Look, it's hard to confirm 6 days a week of live streams. Obviously that's a big commitment, but I'll try my best, of live streams. And then within the live stream, I will kind of film a video within the live stream, cut it up, and post the video after the live stream. So we'll have like a 20-minute segment in the live stream that will act like a video, and then the rest of the live stream, I'll just be answering your guys' questions and engaging with the community, and stuff like that, and picking out altcoins you want me to, draw up and stuff like that. You guys can recommend stuff to me. So I'm pretty keen for that because it will build a lot of community interaction. And yeah, it should be pretty engaging as well. Keep things fresh. So yeah. That's going to be probably from not tomorrow, but the day after onwards, and I'm looking forward to getting into that. But regardless, let's get into Bitcoin. One thing I want to talk about on Bitcoin specifically is the fact, and my opinions are well known on Bitcoin at this point. My opinions on Bitcoin, Q4 bottom's going to be most likely within October to November. I don't think it will be in December, and I have a buying plan here. If you're not familiar with the buying plan, go ahead and read that out. That's the buying plan, and obviously the percentage is based on my portfolio allocation and what I'm recommending people should do. We have that downtrending yellow line. Breaking that would be a breakout. That wouldn't confirm the bottom though, and this is something we covered yesterday. The bottom would be confirmed once we break above the horizontal consolidation support that we have in every bear market. For example, in 2014, that support was at $319. In 2018, that support was at $5,769. As you can see, we consolidate on it. I'll just draw it up. We consolidate on that. We see one capitulation, then we see the bottom round out. And that's the same thing we saw in 2014 as well. Just going over again, we consolidate on that horizontal support. We see one capitulation, we round out and go upwards. And that seems to be something similar to what we're seeing here in 2022. Now, it's not exactly similar, but it's pretty, it's pretty similar to me. We had a massive horizontal consolidation zone, right? Drop below, and now we could be seeing a rounding out at the bottom. Now, obviously, there is a chance as well that this, in fact, is the horizontal consolidation zone, and we see one more capitulation before rounding out lower. That's, I suppose, the problem with making a prediction based on that. But the point is, the pattern we can expect is going to be the same. Horizontal support, drop, and round out. Now, this kind of leads me into the first issue that I have with Bitcoin, right? And then obviously breaking above the horizontal support would be a confirmation that the bear market is over, okay? That's the confirmation of 28.6K. Now, the problem that I have with Bitcoin right now that a lot of people are pointing out to me is they're saying things like this, right? They're saying, in fact, let me get up this chart again, and I'll just go on a small time frame so I can show you guys a bit perfectly. They're saying things like this. They're saying, okay, Wolf, this is bearish, man. This is bearish. And, I agree, it is bearish. I don't think it's good. But I don't necessarily think we have to go below 17.5K. All right. And one of the reasons people are using, besides the macro, which we talk about so much that I don't actually want to talk about in this video. We've spoken about that so much. My opinion is very clear on that. One of the TA reasons they think the bottom is not in is because they think this pattern, they look at this pattern and they're like, okay, well, that's a rounding top. Right? That's a rounding top formation. It's a kind of an inverted semicircle formation that generally represents exhaustion. It's where the bulls try to push the price upwards. They can't do it. The bears slowly take over, control shifts, and eventually we just drop down. Now, they could be correct. In fact, let me get up a semicircle. I'll just find out where it actually is. I haven't used these in a while. Semicircle, here we go. And we'll draw that in. This is essentially what they're saying. Right, that's what they're saying, and what you do with these kind of formations, we're taking it from candle closes, remember. In fact, we'll just bring it down a little bit further here. What you do with this kind of formation is you take a measured move, right, from the center of the semicircle up to the top, the wick of the semicircle. We're going to take it from the candle close to be conservative, and you apply that to a breakout below the neckline. Right, and you can see that this move would be targeting 14K. Now, 14K is obviously very near 13.8K, and 13.8K is a horizontal support zone on Bitcoin that we identified here. It's this line here that I'll make pink just for the sake of argument. It is a very strong support zone that was held up during the bear market and before the bull market. Oh, it's not very strong, but it's definitely there. In fact, it rejected us there in 2019. We didn't get above it until 18 months after that, so it is relatively strong. But essentially, yeah, so that's targeting this kind of semicircles targeting 13.8K-ish, which would make sense as per a TA perspective. Now, my problem with it is this. How do we know it's a semicircle? Okay, Because I'll tell you what, semicircle isn't a formation. It's a rounding top that's the formation. Okay? So this isn't a rounding top. Why is that? Well, it's not at the top, is it? Right? It's very, very clear. It's not at the top. This over here, that was a rounding top. Okay? And this here, that was a rounding top. Right? And this here in September, that was a rounding top. And even over here in April, right, if we zoom in on that, that was a rounding top as well. This is not a rounding top. This is not a top at all. This is a bottom. Okay? This is the bottom of the entire range. This is not a rounding top formation. And then you could argue, well, people would say, okay, well, what about an inverted head and shoulders pattern? If you see that and you see an inverted head and shoulders pattern, I don't know what to tell you, my friend. Go to Specsavers, because that's insane, right? That's not that's not a head and shoulders pattern. It's just plain and simple. It's just not, okay? What I would say, and this is why I'm considering the 17.5k bottom relatively seriously, all right, one of the reasons at least, is that this is more like a W formation, a double bottom formation, okay? We test for low, we come up, we scoop upwards, and we test for low again. If it holds, what does that form? It forms a W, and a W is the perfect pattern to break above 28.6k and return into, or in fact, exit bear market territory, right? So, no, it's not a rounding top formation. No, it's not a head and shoulders pattern. That is nothing at the moment, but it could very well be a double bottom formation if it works out correctly. Now, that's speculation, of course, but I'm just debunking that because I see all over Twitter, analysts are just posting that like mad, like crazy, like it's so obvious to them, but it's really not. I mean, it's just not a bearish pattern. I mean, it's really as simple as that. I mean, I don't know what other way I can say it. It's not a bearish pattern. But one thing I will look into as well, now that we've covered that, is the shorter term for Bitcoin. Now, we had a symmetrical triangle formation inside of this descending broadening wedge, a messy wedge. With that said, we broke it to the downside. As per the break, we can logically expect to see a retest of 17.5k, okay? We can logically expect to see that, or at least somewhere around there. I mean, I would be very surprised if we didn't. Look, you know, the way I see it is the 4-year cycle is relying on Bitcoin at least retesting 17.5k in Q4. And I think, you know, even people who don't believe the 4-year cycle theory would suggest there is evidence to suggest that we will be going there. It would be insane, you know, and even if you don't believe in any of those theories, any of those macro trends at all, from a TA perspective, right, this is a rounding top structure. So whether you're bearish or bullish, whether you're, you know, that would be your assumption if you were bearish, right? This would be a rounding top structure. So if you're bearish, it should retest 17.5k and most likely drop below. And if you're bullish and you think it's a double bottom, it should retest 17.5k to confirm the low anyway. So regardless of whether you're bearish or bullish right now, the logical assumption to make, if you think it's a rounding top, we should be retesting 17.5k. If you think it's a double bottom formation, we should be retesting 5k. So 17.5k. So regardless of your bias on Bitcoin right now, it is universally agreed upon, basically. I mean, that's the way I see it. That 17.5k will be retested. So it is hence universally agreed upon that the bottom is not in yet, or in fact, you know, or to be more specific, the bottom is not in, or at least it is not confirmed and retested yet, okay? So I think, yes, 17.5k will be retested, at least around that reason. I believe we'll probably wick below it briefly, and my buying plan does reflect that. Now, as per the S&P 500, and this is what we have on the screen right now, we have come all the way back down, and we on the S&P 500, similar to Bitcoin, are also, you know, potentially forming a double bottom formation, okay? That's a chance. Now, as, you know, unlike Bitcoin, the S&P 500 actually doesn't really have a double bottom yet. I mean, it could definitely form that, but what it's more likely doing at this point is forming a massive rounding top. That's not how you draw that. Hold on one second. What it's more likely doing at this point is forming a massive rounding top formation, okay? That's a rounding top formation because we moved upwards, we formed a massive top, and we came back down. Now, it could be a double bottom. I mean, there's no distinction between a rounding top and a double bottom until the floor breaks below it or not. Okay, so that's kind of something worth noting as well. I suppose realistically, it is kind of the same thing as Bitcoin right now. It's just a little bit more sharp. But yeah, will we bottom out at a double bottom on the SP 500? Well, I don't know, man. But what I can say is that we certainly will be retesting that bottom. And what I can say as well is, generally speaking, on the SP 500, when we get down towards the 200-week SMA, which is this green line here, we do generally test it, right? So I think we will be testing that 200-week SMA, and guess what? That 200-week SMA lines up perfectly with a retest of the double bottom. Now, something that's worth noting as well is that in the last 5 days, right? The last 5 days, the S&P has dropped 6 or 7%, which is pretty significant for the S&P. Bitcoin is at the same price, so that's interesting. So I think a lot of that macro argument now is slowly starting to be revealed as, I don't want to say BS, because it's not, right? The S&P and Bitcoin, they do move together. They don't move together because they're correlated. They move together because they're both correlated to the macro situation, right? That's important to note. They're not linked. They're actually separate, but they both are linked to the same thing. So they're inadvertently linked, I guess you could say. But essentially this, right? We've dropped down massively on the S&P 500 the last 5 days. Bitcoin hasn't moved an inch. So yeah, I think the macro is heavily tilted towards traditional markets, and the macro could still look very bad, and the S&P could certainly still drop a lot. But that doesn't necessarily mean Bitcoin has to drop a lot. Yes, they're correlated, but guess what? They're not perfectly correlated. And the perfect example of that is this. Bitcoin topped out in November 10th, 2021, right? And it dropped down 50% before the S&P bottomed out 2 months later. So to act like these things are perfectly correlated is ridiculous, right? We could very well see the S&P 500 drop all the way down to 3,400, its next level of support below the 200-week SMA, and Bitcoin still holds 17.5K. We could see that happen. It wouldn't even be out of the ordinary, because we've seen massive deviations in the past, as suggested by that November drop on Bitcoin and that delayed drop in January in the SP, right? So, let's be a little bit critical here. Just because the S&P 500 goes down doesn't mean Bitcoin needs to go down. It's just a generalization. It's not always perfect. And when it comes to macro lows and macro tops, that's when it starts to deviate in those major points of contention, those macro lows and those macro bottoms, tops. That's where it starts to deviate. It doesn't deviate in the middle. The middle doesn't matter. No one's interested in the middle because no one thinks the bottom's in yet, right? It's when people start to think, okay, maybe the bottom is in regardless of what's happening with the S&P, that Bitcoin starts to bottom out and the S&P 500 still drops. And the same thing vice versa. So that's interesting to note as well. Now, as for Ethereum, okay, Ethereum, it's on support right now. It has a clear daily candle close support at the bottom of the screen box at 1,242. And if we drop below that, we will be trending downwards, certainly towards that 978 support that it kind of touched back in June. Now, the merge was a big disappointment, essentially. Not as per fundamentals, but essentially got priced in very fast. Everyone thought it wasn't priced in, and we dumped down, and we called that, and we're still trending downwards massively on Ethereum. So that's a bit of a lesson there. Don't just buy because of fundamentals. Fundamentals, yeah, they can help, but they don't necessarily mean the price is going to go upwards massively, right? It's not how it works, especially when you're caught in an event which is buy the rumor, sell the news, and that's basically every single event. Every single event is by the rumor, sell the news. That's how the markets work. They price in something, and then if something happens that's unexpected, that's when it moves. So Ethereum's doing the same thing, essentially testing support. Everything's on support right now. That's very important to know. The total cryptocurrency market cap is on descending channel formation, I should say. It's broken down from a pink symmetrical triangle formation, and it's trending downwards. Yes, it is important to note, though, that is a bullish formation that will eventually break to the upside. It's just a matter of when, and we could go down very far before it does. So, I think this is, and one more thing, sorry, the DXY. DXY has kind of touched the top of a trend line that formed in 2006. And so this is, it's been going parabolic. I mean, there's no doubt about that. And this could be a potential short-term reversal point. After this parabolic move, seeing it's almost touched this resistance here, we could go a little bit higher to 115, but this could be a short-term reversal point and maybe even a long-term reversal point for the DXY here. So that's interesting to watch as well. Get that up, draw up what I've got on the screen here, and watch that because that's very important for the markets. But I'll get into that in future videos here. I think the overarching point that I wanted to make in this video is this, right? Just because the S&P is dropping doesn't necessarily mean Bitcoin needs to drop. I think another point I wanted to make is this: be careful with these analysts on Twitter and YouTube telling you that this formation is so bearish. There's nothing confirmed to be bearish here. There's really nothing. And the third point I wanted to make is that regardless of whether you're bullish or bearish, regardless of whether you think that's a bearish formation or a bullish formation, you should realistically think we'll be retesting the lows at 17.5K at a complete minimum. So thanks for watching, guys. Cheers. Go to my YouTube channel homepage and click on the join button. You will see a tab that comes up which shows you all the information of the VIP membership with the Wolves of Crypto YouTube channel. What you get in return for 40 AUD a month, which works out to be around 30 USD a month, is 4 exclusive trading setups per week, which have been extremely profitable in the past. Prioritize reply to comments on my end. a trading psychology lecture, which is extremely useful, and some people have actually said that's the most useful video I've ever made. It goes into a deep dive into the actual mechanics, psychologically speaking, around trading, and then also an exclusive Telegram group access link, which has over 200 members currently, and so you can go in there and discuss the market 24/7 any time of day. We've got members from all around the world in there, so go ahead and sign up to to VIP membership using that join button there. Moving forward, we're going to talk about BitGet, and this is the exchange we use on the VIP membership. So this is all the VIP members use this exchange. Now, I actually was using this exchange before I had a partnership with them. I was the one who reached out to this exchange asking for a partnership because I genuinely think it is such an improvement on the major exchanges like Binance and Coinbase. Why do I think that? Well, first and foremost, it's got 0 fees on spot pairs, which is saving you a bunch of money. On top of that, it's got 5 times lower fees than Binance on futures trading. So immediately it establishes itself as an extremely cheap and efficient exchange to use for everyday trading and even investing, honestly, if you're investing with considerable chunks of money. On top of all of this, it holds true to the values of cryptocurrency. And it does that by being non-KYC on your end optionally, which means that essentially, all these other exchanges here, heavily centralized. They require you to put your identity in. They require you to kind of, trespass and encroach on the values of cryptocurrency. BitGet doesn't ask you to do that. You can do it if you want to for tax reasons, but it doesn't ask you to do it. It's not mandatory. You can use this exchange globally, and you don't even need to link your identity to it if you don't want to. Now, that doesn't take away from the safety of this exchange, because this exchange actually has a protection fund, and we'll click on the link here. And essentially, they have deposited 6,000 Bitcoin and 80 million USDT onto this exchange to make sure that in the occurrence that someone loses their money on the exchange via a hack or whatever like that, you can make a request here and you can get that money refunded to you, provided it was not the fault of the exchange. So that's very interesting as well. Not many exchanges have anything like that. So go ahead and sign up to BitGet using my referral link in the description below, and you will additionally gain access to a reward center with over 4,000 USD in rewards. And on top of that, adding to the list here, you also get 10 USD dropped into your account straight away after you make your first trade using my referral link exclusively. So go ahead and do that. You're supporting the channel in doing that as well. It's completely free and it takes 5 minutes. Thanks, guys. And then lastly, we've got the Crypto Academy. Now, this is for people who want to learn how to trade. So if you're interested in learning how to trade, I recommend this course. This is a course developed by myself and Megawell Crypto. If we scroll down at the bottom, you can see Megawell Crypto, big analyst in the space. We work very closely side by side, share a lot of the same ideas. We also challenge each other on some ideas. And so we've got 2 perspectives together in order to form this one course. You can go to the website and read the bio. Essentially, it's 10 units. It's very comprehensive. It's very extensive. And it's going to teach you everything you need to know about trading in a cryptocurrency market. And to be honest, any financial market. It's going to teach you how to learn those charts. It's going to teach you the right mindset. It's going to teach you how to find the trades, etc. You can join us here. Go to the website, scroll down at the bottom, and chuck us an email at cryptoacademycourses@gmail.com, and we'll get back to you with the rest of the information. Thanks for watching, guys. Cheers.